other?
Yeah, I mean, I think it's straightforward. And look, number one is that interest rates are completely irrelevant, and it's something that policymakers focus on, or they want us to focus on. But interest rates are a very, very poor guide to monetary conditions, and I can explain that. I'll show that in some charts in a moment. But I think that if you just go back and think in terms of what's happened in the last year or year and a half. We've had markets globally, financial markets rising, stock markets picking up significantly from the lows. Through that period, liquidity has been the major driving factor. Rising liquidity has pushed these markets up. And throughout that period, you've had a flip-flop of interest rate expectations. Sometimes people are thinking interest rates are going up. Sometimes people are thinking that interest rates are going down. At the beginning of the year, people were factoring in 6 or 8 rate cuts in the US. Now they're saying they'll be lucky to have 3, but throughout that period, the market's still gone up. So interest rates don't really matter in that context. Secondly, if you drill down into the case of Japan and you said, well, okay, what they've done is they've pushed policy rates to slightly positive from negative. But if you look at the term structure of Japanese interest rates, that has not mattered a jot to short-term rates, say 1 year or 2 year rates. They're already pricing in positive numbers for policy rates in Japan. So the market's got there a long time before. And this is just a cosmetic showing by the BOJ to actually say that they're recognizing the fact maybe that a negative interest rate is not a sensible policy. So I think it doesn't matter a jot, and I think that it does not indicate in any way that Japan is tightening monetary policy. Now, to come back to the issue of why is it that you've got the yen weakening, I think the yen is structurally weak. I've made the point for the last 2 or 3 years that I think that the Japanese yen is a Trojan horse or a stalking horse for a weak Chinese yuan. I think it's been a deliberate policy mechanism that's been enacted in combo between America and Japan, trying to put pressure on China. It's been enormously successful because it's forced the Chinese to flip-flop significantly in terms of their monetary policy actions. It's helped to destabilize the Chinese financial markets, and it's caused the Chinese economy to sort of grind towards a halt. So I think that currency is a very, very important political weapon, and I think that's been used. So I certainly do not expect the yen to be a strong currency this year. Now, I've been a maverick on that. But I think that if you go back to the beginning of the year, it's the one consensus trade that everybody agreed on, that the yen would be a strong currency. I disagreed, but I think that I'm still in the right camp.